well, not just friends there, but obviously acquaintances. And we've got some people from USDV just kind of scoping things out. Obviously, I can't go there being based in Vietnam, but we're just trying to get a scope of the stablecoin, kind of landscape as we go into it. It's interesting that someone posted the USDV.finance. We don't know whether that's someone trying to clone us in preparation, or someone just coincidentally had USDV as a name. It doesn't really seem like there's much content there, so we'll try and reach out and see what the score is. Obviously, we are going to stick with USDV, V Vamanti. It just kind of makes sense. But we'll keep you updated on that. So we've got the mid of June for the smart contract launch, which was the actual stablecoin. So middle of June, we should be launching USDV officially. The payments remittance project, we're hoping that comes out a few weeks after. The reason we want to push the stablecoin out is because we have some partners, not just in DeFi yield generating space, but we really want to push adoption for a lot of different networks, Stellar, Tezos, BSC. We want to get this out there. So the middle of June, we should be announcing a bit of PR as well, hopefully. We've identified the security audit partner. I don't want to mention a name just yet, but we are going to be focusing on the best for cost and optics. So we are looking at one of the big four, probably, for the security audit, just to analyze the smart contract, make sure there's no rug pulls or unbalancing functions. Make sure it's just a clean cut, one-to-one redemption stablecoin. What else is there? Most of the front has really been working with the trust companies. So obviously, as you guys know, I identified 2 good trust partners. One of them, we had the contract signed. And then we had to go through the whole legal process of getting everything established, getting everything signed off by multiple different legal partners. Regulation is the biggest key for us. There are some more trustworthy stablecoins than untrustworthy, for example. But to us, it's about longevity. Not only are we going to be tagging unbanked, underbanked people around the world, we want to earn their trust, and the way to do that is through regulation. I think there's going to be a growing trend of people calling out decentralized networks for having centralized aspects. But for us, that just means that we're stepping in the right direction. We don't want a full decentralized stablecoin. We feel that for security for users, there has to be an element of centralization. Decentralization is great in some aspects, but for the use case that we are targeting, we really just want high security. So I think I tweeted a couple of weeks ago, if we're providing virtual bank accounts for people in South America, these people are really going to be holding $1,000, $2,000, which would be a life savings of a couple of years, for example. So we don't really want someone to lose their bank account because they forgot a PIN, or if they forgot a mnemonic passphrase, they're going to lose their wallet. To us, this is just not feasible. We want to offer a good product, a way to make people make their money work for them, essentially. We could do it in a decentralized way if we wanted, but the only thing that's going to happen is we're going to have to put it through rigorous security testings. We're going to have to put it through multiple audits, like pen tests, and it's really unfeasible for the use case that we are targeting. So we don't actually want a decentralized ecosystem. There are going to be some projects or some tools that we work with that are decentralized, but we really want to get the best of both worlds. So it's been pretty crazy as this Bitcoin Miami conference comes on. I apologize for being late for the call. I had to jump off with some VC firm from Bitcoin Miami. So I thought you guys would appreciate me actually working instead of missing the call. But yeah, I mean, if you guys have any questions, more than happy to answer them. Just let me know. Anyone feel free. This is an open platform. if you have any questions, more than happy to answer.
Hey Warren, what are the risk mitigants for default for these people who are actually accessing this finance system? What if, in turn, they do not repay? What are the default mitigants?
You're talking about the platforms that the funds is lent out to, essentially.
Yes.
Gotcha. Okay, so there's a couple of different fail safes. So for one, we take the funds out and we deploy to portfolio investments from Vamanti. So we have what do you call it? We have an insight into the project. It's not like we're just loaning these out randomly. You know, these aren't uncollateralized loans that are just going out to anyone who applies. These are companies that Vamanti, you know, already has like a pre-agreement with. You know, if we can provide this capital to scale, then obviously Vamanti benefits because they've invested in that company. So as that invested company grows, Vamanti obviously gets a bigger profit share because the company is growing. They also have enough of an investment for them to speak to the board and have an agreement in place that if we do loan this out, one of the first things that is paid back is the liquidity. The second one is we're not dealing with individuals here, we're dealing with companies. So we're not dealing with 1,000 different loans, we're dealing with one loan to one company. So it's much easier to keep track of. We also are not, if an individual defaults on a loan, it's the company that takes that risk. And these lending companies have essentially a reserve to cover any of these loans that are defaulted. So what we're actually doing is we're trying to monetize the liability rather than trying to monetize the asset. The asset is essentially, the fiat that everyone deposits. They have the stablecoin, they earn the interest. The companies that have these liabilities with the users, they're more versed in debt collection, et cetera, et cetera. It's not like, it's not like USDV is going to go around all these different countries and try and collect all these loans. So the companies that are actually receiving some of this liquidity is already an invested company from Vamanti. So the due diligence has already been done, personal introductions, all of this kind of security risk management is done around only companies that Vamanti has invested in. So it's a win-win for everyone, really. People on the ground, they have more access to loans. The companies that are doing the lending have more access to liquidity to increase the loan amount and the frequency. Vamanti benefits from obviously issuing a loan to these companies that they've invested in. So as these companies grow, Vamanti benefits from both as well. So Vamanti doesn't actually take any risk from the loan. We just loan it to the company, and then they're the ones that handle all of the risk mitigation. If, for example, that company goes bankrupt or we are unable to cover anything, then we're actually able to monetize that liability from that loan. So we could just sell the debt to another company across Southeast Asia or South America or North America, wherever the actual investment company is located. So there's multiple different ways, really. And also, in regards to the virtual bank account, if there's any fiat within that and some reason USDV is unable to continue, that's when the FDIC insurance kicks in. So there's different layers that protects the users on different aspects of the platform.
Cool. Warren, thanks again for taking the time to talk with us. I know you're on a crazy schedule. I bet the team's working hard as mid-June is approaching. I was curious to where could we acquire USDV on day one when it's finally announced, and if it'll be available on other platforms as time goes on.
So we're looking at Uniswap. There's nothing special about being out on Uniswap. Anyone can go on there and issue a contract. The main thing that we're concerned about with Uniswap and DEXs is the ability for people to exploit the smart contracts, really. That's one of the biggest concerns that we have to be, very aware of. The next place is obviously going to be some of the centralized exchange. We are speaking to Binance. We don't know if we're going to be issued on launch day, on day one. There's also a couple of remittance platforms that we're going to be integrating with. There's also going to be V Systems, which is one of the Crypto OG's new projects. So I'd say pay more attention because we will be releasing that info. We just have to kind of get a rollout schedule. So the rollout schedule is where we just identify the best partners to work with. We don't just want to push it all out there at the minute because then there's no growth. We have to channel a lot of the demand really. So if you guys are based in North America, we'll give you like a North American specific channel that you can obtain USDV because we want everything to be legal. We don't want people to go out there. And another reason that we have to be very careful with when we announce is, say for example, we told you guys now, oh, it's going to be on Uniswap. And then, 10 different people could make 10 different USDV smart contracts and then put them on Uniswap. And then, we get people coming to us and saying, hey, I've got this USDV, but it doesn't work with the wallet, etc. So we want to eliminate a lot of these people releasing false products or anything like that. So I think the best thing to do on where to obtain is just, keep an eye on Twitter and Telegram group in the next week or two, and then we'll announce the best distribution partner for where you would be located.
Cool, thanks.
No worries. And thanks for being patient with me. I do apologize for running 30 minutes late. It wasn't an easy decision to make. It was either get off the call earlier, or it was essentially that was it really. Does anyone else have any other questions? It's an open space, guys. Feel free to interject, and there's we're all cool. You don't have to be reserved or shy or anything. I mean, what are your guys' thoughts on DeFi? Is anyone here familiar with it? Have you looked into it? Obviously USDV is focused more on a centralized, but what we're hoping to do is bridge decentralization with a regulated stablecoin. So we're actually hoping to provide like an on-ramp onto DeFi from regulated currency.
I mean, me personally, I think peer-to-peer finance is a very, it's like the future of how people will transact with each other. I think it's really cool. While I haven't really engaged in it too much myself, being in North America, I have access to traditional banking services. I mean, I use Venmo and Cash App all the time. Go to like a food truck wherever I get lunch during the day for work. Always pay the guy in Venmo. So I definitely see the applications of the peer-to-peer network of it all. And, just reading all these reports about how the central banks are really experimenting and studying the concept of central banks' digital currencies makes me think that there is a strong future with stable coins, whether it's actually distributed from the central bank or if it's distributed from these private companies like Vamanti. So I'm excited about it all. While I would not say I'm an expert by any means or really understand quite how it all works, I do think that the lack of centralization and the the speed that DeFi and blockchain provides for is really, really cool. And like you're saying, like the fact that there is a security component with centralization, like the fusion of the two is going to be a very, very good thing for people and for businesses.
Yeah, I honestly don't understand why a lot of people think centralization means why centralization is like the end of the world. Decentralization has a lot of flaws. People often refer to blockchain as being in the black and white era of movies, compared to where we are now. And it's right, we are early stages, so I don't understand why something as important as finance, doesn't require an extra couple of years to kind of flesh out. So we still feel that we're very early in the game. And as you said, there's a lot of banks out there, and there's a lot of large corporations and government agencies looking at CBDCs as the next step. And that's because it's an evolution that they can't really stop or control. So they are going to regulate it. It's just no one really knows how. The best thing that they have to build that on is the existing fintech regulations now. So, by following their regulations that they have now and then kind of anticipating for the future, we have a fantastic legal team. They've been writing a few things over the past 5 years, say. So it's really interesting to see, some of their precautions, I should say. So that's been a really cool experience, trying to regulate for future kind of problems. But decentralization as a core mechanic, it's as you said, P2P transactions very important. It is the next step of finance. And as you said before, you're using Venmo to go around these, to pay for the food truck or whatever. When I lived in China, I didn't touch cash in 6 months, 7 months, I think. And it only broke because I had to get my deposit back from my landlord. And then obviously there was a banking regulation where he couldn't send, a few $1,000s by WeChat. You can do that, but me being a foreigner in China, it wasn't really possible. But everything that we used, we used WeChat Pay or Alipay for everything, like everything, even to pay a homeless guy. If you say you don't have money, they just whip out a QR code and say, just send me it on WeChat. And then you have to look at a lot of these emerging countries, not just in Southeast Asia, but South America or parts of Africa, where they don't have, this fintech infrastructure. So the ability for someone to use like a financial investment vehicle is totally beyond the financial education of these countries. So we have to really explain a lot of SPV purposes to these people across these emerging regions. Unfortunately, there's a lot of problems with people taking advantage of this lack of financial education. So we're hoping to come in and kick these kind of faulty projects and systems out and replace it with not only something that's regulated, but something that's backed by American regulation, which is notorious for being some of the most strict and the most stringent in the world. So we're hoping that a lot of people will see the benefit of this. And to be honest, we have got a lot of demand more from South America, but this, not just South America, sorry, Southeast Asia. South America and Southeast Asia seem to be the two strongest emerging markets for unbanked and underbanked. And a lot of this is down to remittance. This is kind of where the payments platform comes in. For someone that's earning $500 a month, for them to send, $100 back home essentially, and they're getting charged, $15 to send it, and then it's T+3 days, and they have to require the bank account on the other end. And that person has to go either to Western Union or to the bank, or it's just a bit of a nightmare. So we want to offer a better, faster, cheaper solution for anyone in the world. So one of the reasons that we're working with the trust company in the States is to keep the regulation on the US side, offer the FDIC insurance, but then also work with 150 different other currencies. If you look at something like TransferWise, they had a very solid need, and that was born from a regulation use case. So there was a guy in, I think it was Poland. There was a guy from Poland, and there was a guy from Belgium or something, two different foreign European countries. But they both needed each other's currency. One needed pounds, one needed euros. So they would just ended up swapping their salary. The other guy pays the money, from the Polish bank account to the Polish bank account, and the other guy pays the British bank account to the British bank account. And then obviously they scale this up to a $1 billion company. And that's all born from a remittance use case. So, it's easy for us to forget essentially that there's people out there with many different financial needs, but we're hoping that offering all of them in one platform, is enough to essentially convince people that financial investment vehicles are not bad. The people that run these hedge funds and these kind of investment vehicles, they're not bad people. It's the middlemen. For someone to offer $1 million loan from one country to another, there's probably 10 different people in there. Taking cuts. There's so many middlemen, and everyone takes like zero, like 1 bip, 2 bips here and stuff. Just small skimmings off the top, essentially. But that industry is worth trillions of dollars. So we're hoping to step in and really disrupt it by offering everything in one. I mean, Venmo, actually maybe not Venmo, but Cash App offers an on-ramp into Bitcoin. You know, PayPal offers it, even Robinhood offers it. I mean, having a product like Robinhood shows how advanced the financial education of US citizens are, you know. But if you remember, if you were trying to, there was a period between 2000 2015 where if you were trying to talk to someone about stocks, it was, you know, up in the air. No one really had a clue. And now we have, you know, applications on the phone that you can commit trades from. So if you compare that to something like South America, where, you know, there might be a product that exists, but there's just no adoption. One, because people don't really have the money for trading stocks. You know, people prefer to save cash. And then the other one is, you know, people just they don't know what to do. You know, they don't know, not that they don't have an interest, but they just don't really understand how everything works. And then you look at places like Vietnam, where, you know, there is a demand for this kind of fintech tools, but people keeping cash in the mattress. You know, most people will have a safe at home rather than keeping the money in the bank account. And this is just born from a distrust of the financial infrastructure. You know, obviously since the 1970s, people are just expecting the worst can happen at any time. You look at places like Syria. You know, Syria was a very, I wouldn't say, you know, overdeveloped futuristic city, but it was a developed, you know, society. And then you have people that, you know, had several $100,000, you know, fleeing, and, you know, you just don't know what the worst can happen is. So having systems, you know, like USDV in place, you know, allowing people to send money T plus instantly, T plus 3 to 4 seconds, depending on the network speed. It's a real solution essentially. And then, you know, we've seen things like Amazon. Amazon being very customer focused, and, you know, one of Jeff Bezos' famous quotes is, "He only invests in things that are going to change people's lives." And we're so confident that USDV is going to be able to change the lives. Just because it's not applicable to you know, us, for example, it doesn't mean it's not applicable to an emerging market out there. So we're really interested, to be honest. We're really interested to get this out there. We've luckily we've got the mid-June commitment date from the development team, because obviously we were looking for a number. So middle of June, about the 15th, is when the contract should be going live. But then we also need a security audit on that. So there'll be some good PR. There'll be some good PR going out this month.
Hey, Warren, real quick, what's the speed on how somebody in a foreign nation, maybe Southeast Asia, could get access to cash to pay for cash services through this platform? I mean, obviously, what you said is 1-to-1 USD, but how can someone actually give a let's just say a dollar for dollar service in Southeast Asia without accessing cash?
Sure. So what we have is various different partners. Some are fiat on and off ramps. Some are essentially communities of cryptocurrencies and other stable coins there. Probably the more developed relationships we have in Vietnam is with a group called VNDC. So they run a Vietnamese stablecoin. And obviously, you know, for them to send to the US, there's like two different conversions, right? They have to go from VND into VNDC into VND, and then VND into USD, and then send that USD to the States. What we're hoping to do is just offer a market rate swap with VNDC. So with USDV, we swap that to VNDC, we send the USDV to the States, and then on the USDV side, it's swapped out. And we basically just replicate this model with different countries. These different communities have many different ways. VNDC works with banking facilities in Vietnam. So for them to accept cash, it's not a problem, you know, by bank transfer. But for someone in South America, what they tend to do is that there's like cash offices, or there's like community leaders, which essentially just sit on a pile of cryptocurrency and cash. There's paper offices where people just go and, you know, deposit at various ways. Whether that be like a manual bank transfer, or they do something like, you know, the crypto swap in the paper offices. They're the ones that normally collect the cash.
Yeah, quickly, Warren, I'm sorry, but yeah, how quickly can someone in a foreign nation convert USD to cash?
I don't really, if they just had USD cash in a bank account or something.
Yeah, I mean, how quickly could they convert a crypto type currency like this to cash in a foreign nation in the local currency?
Yeah, sorry to cut. Adam, do you mean USDV instead of USD?
Right. If USDV is equal to USD1, right? I mean, you should be able to go to a foreign nation and cash that.
Well, it's all about the acceptance. So you wouldn't be able to take USDV to Western Union, for example, and say, hey, I wanna forex this, or and most people won't actually withdraw USD in a foreign nation because it's not the native currency, right? So we're not expecting people to withdraw USD in these foreign currencies. What we're hoping is to get people onto USD from volatile currencies. So they'll probably exchange they'll probably go from like peso, for example. They'll go from peso to cryptocurrency to USDV, or from peso to USDV with a partner that we've identified in that region. So for them to, if you're talking about someone wanting to withdraw USDV from the system, they're most likely going to go from USDV into an alternative cryptocurrency rather than USDV into USD. Anyone that's going to be withdrawing USD cash is 90% of the time going to be located within a North American region.
Yeah, I guess my main question was around like local currency, right? So if you own this, or you're trying to move this money from one country to another without, with full transparency, if you want to withdraw cash in X nation versus United States or whatever, how easily can you access cash? Doesn't depend on the currency itself, right? So like the local currency, how easily can you access cash?
Depending which partner I mean, if that is an option for the user, depending on the processing speed, you're probably looking like T+1 day, depending on the amount of cash. Obviously, we're anticipating a lot of people to be, sub $1,500. So it wouldn't be that. It would, anything over $10,000 obviously takes more time because it has to go through the federal notification system or whatever it's called. So T+1, but we don't anticipate any people to be withdrawing in cash anyway. Most of the time, it's going to be a one-to-one, swap. So they can do this within the app, and that's going to be instantly because everything's basically one big internal ledger, and then they just, they set the exchange rate and then withdraw it at their own pace. So say, for example, you're in South America, you have the app. Say you have 1,000 USDV and you really want to take USD out, or you want to take Bitcoin or something, you can just do that within the app, and then it's done instantly. And then whatever you choose to do with that is, if you want to go through a traditional banking rail, then obviously, you're talking T+3 days. If you want to just send it to another user, that's instant. You want to exchange it into a different currency, or, that we support, or a different cryptocurrency that we support, then that's going to be instantly. Only because we would be beholden to traditional financial infrastructure. So anyone that really wanted to go the traditional banking route, we're holden to their financial rails. But if you're using the new rails that we've developed, then instantly.
Hey Warren, thanks for taking the call. Can you walk me through how? So like, I just kind of want to walk through like an example. So let's say I put $10,000 into your Prime Trust, and I get USDV, and then I loan that to a small business owner in Vietnam who's, let's just pick a number like at a 10% interest rate. Are they putting in their local currency to pay off that loan, or how does that work? Because eventually the loan is going to get paid off, and there should be money in the trust to eventually pull out USD. Am I tracking that correctly, or maybe you could walk me through that?
Sure. So say, for example, you obtain USDV. Within the platform itself, you can stake that, and then that's how you earn the interest. So you don't have to concern yourself with the individual or the legal entity in one of the countries that's taking the loan out. That's all handled basically on our, I don't want to say our back end because it's not an automated system. It's basically handled by the Vemanti team, and then we lend that out to the the portfolio company. So you don't have to worry about whether the loan is collateralized. You just know that it's backed. It's guaranteed by the company that's received the liquidity. So you obtain USDV, then you stake that within the platform, and then that's how you earn your interest. And then when you want to withdraw, then that's handled manually, and then we send that your initial investment plus the interest that you've earned, whatever. Because obviously, as you stake the USDV, your USDV amount is going to go up. So that's pretty much how it works. You don't have to choose an entity or choose an individual that's requesting this. You just stake and save essentially. So you obtain 10,000 USDV, you stake it in the system, and then when the lock expires, you can just withdraw it as you would any other cryptocurrency. One of the benefits of handling our own interest management is with these DeFi partners, we subsidize. So if you look at Celsius, they offer 4 to 6%. The neighbors shouting. They have 4 to 6%, and then we aim to subsidize that on top. So these people could be walking away with 15 to 20%. It really depends on what these DeFi yield farms or these centralized yield generating interest bearing products, Celsius and Curve and Yam, etc. So we aim to subsidize their staking and saving process. So you could potentially earn double. We're not telling people you can only use our platform. We just want to give them a safe space to do it. Because if you look at Uniswap, I'll go and deposit ETH and USDT, for example, and then I'll get an LP token. And then I take that LP token, I go to another platform and deposit that. And then, when the number of people, the more people that join that LP pool, my APY goes down. So then I'm constantly shifting between, 10 or 15 different products in a week sometimes. And then every single transaction or atomic swap, you're paying like an Ethereum gas fee on top of that. So it's a good P2P finance model, whatever you want to call it, but it's not practical. For you to earn like a decent return, you have to pay attention to it. You have to understand, and you lose a lot of that in the gas fees that you pay for all these atomic swaps and stuff. So and again, these yield farm products, they're great if you have like several $100,000, but realistically, not many people on the planet have a few $100,000 that they can keep an eye on, consistently to essentially earn these. Because if you leave your funds in one of these DeFi yield farming projects for too long, you either get hit by someone exploiting the smart contract, or the APY expires because too many people joined. There's just so many things that can go wrong, and it is a bit of a headache. I've been looking at these DeFi projects since 2019, and it hasn't gotten any clearer. It's not got any easier. There is a product called, so there's a few products. One is TrueFi that we're aiming to emulate in the future. That's uncollateralized loans using smart contracts as security. Then we have Zapify. Zapify is a really handy UI. It's friendly UI focused to these farming projects, but they obviously take a bit of a cut. But we're hoping to emulate these and then focus on the retail market rather than the institute. So hopefully that explains the process a little bit better. You obtain USDV, you can stake it in our platform, in your account, which is the easiest way. We just want to give people a channel that we kind of approve on. And then obviously as we build up our partner list, working with Celsius, Compound, whoever, etc., we aim to subsidize theirs. So if you have USDT looking at Celsius, you earn 4%. But then if you look at USDV and you're going to see 15%, 20%, obviously that looks more attractive. So that's the plan that's the plan that we're going for anyway.
Oh yeah, that makes sense. Can you explain how you're subsidizing Celsius? Just kind of, I'm drawing a blank on that part.
No, it's all right. So the way Celsius operates is essentially, you deposit with Celsius, they loan it out as liquidity to different various capital, margin traders, hedge funds, etc., etc. Institutional lending, mostly, I think, is what Celsius focuses on. So if you give them essentially the same as USD. So if I was to go to an institute liquidity manager and they say, hey, we're going to give you 10%, but the minimum you need is like 2.5 mil. Again, not many people have 2.5 mil that they can just deposit and earn 10% off. Celsius operates in a similar manner, but they have retail. So rather than one guy with $1 million, it's 1 million people for $1. Essentially, is their model. But then they offer 5%. They'll obviously take a cut from that. What we are hoping to do is the interest that's generated from the staked USDV. We aim to return that to Celsius, and then Celsius will in turn distribute that to people that use their platform. So obviously people closer to the project are going to trust our platform a lot more, but we're hoping to drive not just adoption, but more so demand by subsidizing the Celsius. So Celsius obviously this is part of the beauty of smart contracts, right? We're essentially creating value. We're basically creating double the value on the same asset. So we subsidize Celsius with the interest earned from our side, and then Celsius adds the interest that they earn onto whatever USDT is staked with their platform. So you earn interest from an interest partner like Celsius, and then you earn interest from the USDV side as well. It's like, I'd say if you had a liability contract, like say, for example, you had USD, right? And then I go to a bank and create a bond. And then I take that bond and then I deposit that and earn interest on it. I'd be earning value from the bond and then also from the asset generation itself.
Gotcha. That makes sense. Okay. Sometimes you got to put it in traditional finance terms for.
No worries, mate. Honestly, I've tried to explain this to hundreds of different people now, and still not many people. Maybe it's the way I'm explaining it. Hopefully when like the white paper and the Git book comes out, it should explain a lot more about the technicals. And part of the issue that we have is trying to explain all the different working mechanics on it. So I totally understand if no one gets it right away. It's not a problem.
No, I think we could zoom in on that chart you put up recently with all the different partners and probably zoom in on every interaction and try to figure it out with an individual call. So I appreciate your time.
Hey, well, I had a question.
Sure, Harris.
Yeah, so I actually I actually send money a lot to Southeast Asia and South America, and I was just wondering, you said it's gonna launch mid-June, but that's the initial launch. I was wondering, do you have any kind of like time frame where it would be like fully available, where I could send it to like my cousin in like Southeast Asia? Because the like you said before, the fees sending it to like people over there, like you end up getting just a fraction of it. They take most of it. So I was wondering, do you have any kind of time frame for when it would be fully like operational, where I could just send money and actually use this?
I would probably say a week after the middle of June. So say, for example, say that the 14th is when we publish USDV, give a few days for the security audit. So probably like definitely within June, maybe 5 days, maybe 20th of June, roughly. Maybe a few extra days after that. It really depends when the security audit's done. We just want to do that just to kind of cover our side, just to make sure that everything's been pen tested. There's no exploits in the smart contract, etc.
Right.
But it's just going to be an ERC20, so you could use MetaMask or BitWallet or Binance, Smart Chain wallet. It really depends. But yeah, ERC you can use anything. The first one is going to be ERC, and then we're going to issue on different partners. One thing that we're going to be doing is speaking to the different protocols like Stellar and stuff and Tezos, and say to them, we'll bring the stablecoin over, but we just want some commitment from their side in terms of PR, maybe a grant payment to help us scale the team, this kind of stuff. So we don't want to say, hey, we're going to go on Tezos now, because then if we go to Tezos and say, hey, we need a grant to do all this stuff, then they're obviously going to turn around and be like, well, we know you're already interested in, so what's the point?
Right.
Yeah.
So it sounds like everything's coming out very close to launch. So what's in like the plan for like July or onwards if everything is being launched so early? I thought it was more of a it was being released a little bit at a time.
Yeah, so the smart contract for the USDV stablecoin, that's going to be live, so people can, deposit, get USDV in July and moving forward. Most of it is going to be partnership integration. So say we nail a deal with Celsius, we're going to integrate into their platform. Then there's other platforms that we want to integrate with. And then most of it is just scaling into different regions. So we'll probably be localizing the product, in different languages. We'll be finding more fiat on and off ramp partners in the region. Obviously, with that, there's some due diligence, and then there's some kind of pen testing and security testing on their products. So most of it is just growth. Like there's nothing really else for us to build or integrate or anything. We've been working on this for quite a long time now. Vamanti just came in at the right time and kind of scooped us up. And really put a fire under our ass to get everything kind of launched and out there. So this isn't like a product that we've been working on for a few weeks. It's taken at least since last year, maybe 2019, but realistically like 2020. We've been working on this before Vemanti got a hold of us. So we're really excited to be pushing it out now. So that's really the reason why everything's being released. It's not been worked on for a few weeks. It's taken much longer than that. So after launch date, most of it is just growth and scale.
Great, thank you. You really answered that question.
Yeah, one quick follow-up question. There's a lot of debate about Tether's backing. Can you speak to? Are you guys going to get audited regularly for USDV backing, or how
yeah,
do you see that?
Vamanti is an SEC reporting company. Look at the trouble that the SEC had. What was that? 3-4 years they were going after Tether and Bitfinex and USDT. We've got friends.
I think they still are. I'm not really sure what the latest is.
They actually they settled to pay a fine. They settled to pay a fine and something else, and then they reported. That's where it came out that they only have 3% in cash. But we've known USDT was in trouble since 2018. We've got some friends in Deltec Bank, who is the trust account partner for Bitfinex, for Tether, in the Bahamas. And we've got some friends that work with like Equity Bank and Trust, for example, and Bluestone and some other kind of legal partners there. And every year, the Bahamas government makes the finance companies report their holdings offshore and onshore. And Deltec was like a few billion under. And they were just like, "Where's the cash?" And they were like, "We don't know. It's in the client's hands, like the clients own it." So that was the first red flag a few years ago.
Amazing.
So I really don't advocate USDT. The problem with Tether paying a fine, the reason why that won't work is they print money, right? So Tether just prints money and then people buy it. They give several million dollars worth of Tether to exchanges. And when these exchanges do airdrops to, they often do competitions, they really pushed USDT. And that's how a lot of these crypto exchanges grew. Like you look at Circle and Binance, a lot of their USDT just came direct from the source, and that was obviously printed. And then obviously Binance came out with BUSD. That they haven't dropped USDT because it's just that ingrained in the crypto community because it's the most widely accepted. Another thing that's worth noting with the USDT is when the SEC when the SEC investigation was announced publicly, you can look at the printing mechanics of USDT on chain, right? Because blockchain, you can see everything. And normally what would happen with a stablecoin is it's printed in blocks, and these blocks are always random. Depending on demand, they usually print blocks like every week, for example. So if you look at USDC, you'll have like 5,673,214, right? Really random numbers because it's pools of fiat that's being printed. But then since the SEC investigation, you look at USDT and it's like 10 mil, 15 mil, 6 mil. It's like very clear, even numbers. And it's like someone's just typing into a computer and just pressing enter. Like they're not it's very unlikely that they have exactly $1 million, you know, for fiat. Normally, it's very randomized collections of reserves that's being tokenized. So obviously, we're not in the same league as being like a fully backed. You know, we do aim to have a small reserve to back the stablecoin. But the main thing to remember is that most of the asset is going to be staked. So once the asset is staked, that's how we earn the interest, because once it's staked, we know that we can then deploy that capital. So we're pretty confident that we're going to be one of the best stablecoins, at least. You know, we're aiming to be very transparent. So to answer your earlier question in terms of auditing, being an SEC reporting company, I don't think you can get more audited than that, essentially. One of the things that we can't really guarantee is the audit on everything, because there's that different mechanics, right? So first we'd have to audit the amount of USDV, which anyone can do that's on chain. Then we have to audit the trust account, but then we'd have to audit the amount of USDV that's being staked, because that's a separate asset. And then we have to audit the amount of fiat in the like FDIC insured accounts. And then we have to audit the deployed capital as well. So there's that many different mechanics on it. It could be confusing, and obviously being SEC filing, we don't want to make things overcomplicated. We just want to keep things as transparent as possible. You know, your money is here, users' money is here. You know, that's essentially how we want to operate. We just want to be fully transparent. But in terms of being audited and stuff, I don't think you can get more. I don't think you can get a higher regulation than the SEC, to be honest.
Yeah, that sounds good.
Yeah.
Thanks.
Hey, yeah, thanks,
Warren.
Apparently, no, you said VMNT, Vamanti actually came after you. Who do you actually work for?
I'm actually hired by Vamanti. So I was working with a few different companies before Vamanti. And then obviously when Vamanti was showing interest in the stablecoin and we had this project, it just made perfect sense for Vamanti to take over. So I'm employed by Vamanti, essentially.
Great, thanks.
Warren, I suppose the white paper is coming out with the USDV on June 15th.
Yeah, we're hoping to get it out a little bit earlier. My apologies, obviously last week was a bit too hectic for us to kind of focus on it, so we pushed that back a bit. But I had a meeting with the graphic designer yesterday to pick up the work on it. So we're hoping it'll come out before June 14th. We want to get that circulated before then.
Okay. About the interest, how would the interest be paid?
It would be paid in the USDV like token, because when we deposit the interest earned from fiat, we put that straight back into the trust account, and then depending on which reserve needs to be filled, then that's where it will stay. And then the rewards are distributed back to users' wallets. So that's another reason why it's much easier for us to distribute the incentives through our own platform, because it's an internal ledger. And then obviously if someone is staking through a third-party partner, we don't want to send it to wallets, right? We just want to send it to the partner. So rather than sending it to 10,000 Celsius users, we just send it to Celsius, right? And then Celsius is the one that handles their distribution on their side. But everything is in USDV. So when the smart contract lock expires, you can just withdraw that as USD if you prefer. Do you know what I mean? Because these other platforms, they pay you in a shitcoin, right? You know, they'll stake and they'll offer you like 100% APY, but you're not earning anything. You know, you're getting it in some shitcoin. And then who wants to buy that shitcoin when its only use case is to pay you an interest? You know what I mean? It doesn't really make sense. It's just greed on a very transparent level. So we want users to be as simple as possible, and you'll just receive it in the stablecoin, and then you can exchange it into whatever currency you like, cryptocurrency or fiat.
And about South America, do you have any, I mean, can you disclose any, I mean, which countries will this be working now since June 15th, or?
We won't anticipate any. We won't be focusing on South America for at least a few months, but we do have partners lined up. Brazil, Argentina, and Peru, I believe, that we're looking at. So those three regions are where we would deploy first. But in terms of when, that I'm not too sure of.
Okay. Thank you.
Warren, so you and your team, you were working on a stablecoin before actually working for Vamanti. Was the stablecoin you were working on before different than USDV? As in, like, were there aspects of it that were different as to now when you guys started working for Vamanti? Like, was the type of coin you were building different? Did it change at all once Vamanti got involved at all, or not really?
It did, but that was only because of the focus on regulation. So we were really trying to push a perpetual yield stablecoin, but it was just the navigation through the regulation was not only just costly, but it was so confusing. Because we're working in multiple different jurisdictions, we had to follow the jurisdictions from each region, essentially. So North America to Southeast Asia, and then within that, you've got the 50 states of America, right? And then you've got the different countries of Southeast Asia. And then within those countries, some can accept digital payments, some cannot. Some have the infrastructure of people using mobile wallets, some don't. So it was really confusing. But this is where the remittance kind of platform came in. It was kind of like an answer to a lot of these kind of jurisdictional questions. So we were looking at a perpetual yield stablecoin where just by holding it, you can earn the interest. But then obviously, how do you deploy that capital, really? If, say, for example, if USDT wanted to take us out, they could just mint 10 million tokens, and then they can just withdraw that fiat straight away. And then that just kind of messes up the whole system. One of the things that I referenced to a few weeks ago was OUSD. They suffered from this exact same problems. Someone just exploited the minting contract, and it really messed up a lot of the project. People lost a lot of faith in it. So when you're working with other people's finances, it's a very tricky scope, right? You have to be extremely careful, not just to breach any regulation or licenses that you may not have, but you don't want to lose anything from a hacker or someone exploiting the smart contract, because it's people's life savings, essentially. Even if it's not life savings, it's still other people's money. So we were looking at perpetual yield stablecoin, but it was extremely tricky. And then obviously Vamanti was exploring the DeFi space, and then we connected them through an old client of mine. And then me and Tanja just really hit it off, and yeah, that's pretty much it.
Cool. So I guess, like, on the grand scheme of things, the biggest advantage of USDV, like you've been saying before, is compliance and capital deployment. That's how the stablecoin can be trusted and how the perpetual yield can actually occur.
Exactly. So the perpetual yield was a totally separate issue. We were looking at these DeFi yield farms, but there was that much risk involved. We were trying to find a compliant way. So we've got a huge list of partners that we spoke to already, and which is great. A lot of the groundwork is kind of done, I should say, because we have these partners that we spoke to, or potential partners in South America, in the three regions that I mentioned before. But for someone to manage a lot of these yield farm projects, they themselves have to know what they're doing. And also if you're paying someone, a salary, like a financial analyst to manage a lot of these, it's very tempting for them to, game the system almost. I mean, we've all seen Office Space, right? Where they try and skim, 0.000 cents off, and then they end up with millions of dollars. We didn't want to put ourselves in that kind of position, especially with other people's funds. So you're right that one of the biggest benefits of working with Vamanti is not just the regulation side, but giving us the ability to earn a reliable yield. The thing is, if you try and explain to someone how these DeFi yield farm projects make money, people are just lost. It's magic internet money. That's what people have been referring to for the past 2 years. It's just magic internet money. It's all built on pyramids and air value and speculation, and it's not a long-term project. I mean, we can see a lot of the market cap of these projects have dropped significantly over the past couple of months. But when we're talking about an investment vehicle that uses fiat and something as reliable as lending, people are always going to need loans. Businesses are always going to need extra cash flow. And even in times of stress, like a pandemic, the demand only grows higher. So it's a very, very reliable way of returning interest. You know what I mean? It's one of the most effective methods I've seen, really, of being able to return a yield to initial users. So if you look at something like one of these crazy random projects where it's like you stake your Bitcoin and we'll give you, some random shitcoin in interest, like, it's great. They can give you 100% APY, but who's going to buy the shitcoin off you? I mean, that altcoin, I should say, sorry, not shitcoin. The altcoin that you receive, its only purpose is to pay you a yield. So the only people who's going to buy it, you've got 100,000 other people that have this same altcoin that are trying to get rid of it, and its only use case is to pay you an interest. So people have joined these systems. They've put like $10,000 in. They're like, great, I've just earned $1,000 in a few weeks, but then they can't cash it out. And the only way for it to do this is to go through things like Uniswap or these decentralized exchanges. And they get, they're not even earning like whatever they were. So say they had $1,000, because there's that many people trying to get out of the ecosystem, that 1,000 becomes $10 very, very fast. But the ability to work with something as secure as smart contracts, a decentralized network such as blockchain, and then you have a reliable way of earning interest such as capital lending from fiat markets. We have the transparency and security of blockchain, but then we also have the reliability of capital lending. So it's the same thing, like I said before. Instead of one person with $1 million, we're looking at 1 million people with $1. This is only possible because of blockchain. This is the only reason why it's not been done before.
Quick question, Warren. What is Vamanti's cut going to be? I mean, do you guys have target yields for the company?
Yeah, so we're not aiming to monetize from the stablecoin itself. We just want that to be its own vehicle. We want to try and pass on as much as we can, to as many people as possible. So, I mean, we might take a minuscule percentage, 1% or something, maybe a little bit higher. But even if you're talking like $1 million in reserve, it's only 10,000, and that's just to cover the operational costs. When we still need to pay developers and the team and stuff. So we're not planning to monetize the stablecoin in any way. We just want to offer a better alternative. We actually plan to monetize the remittance platform, and even then, we're still going to be coming out cheaper as than TransferWise or Western Union or Venmo or Cash App or something. So it's the platform that we intend to monetize. The stablecoin, as long as we break even, or maybe like 5% over break even, that would be acceptable, really.
So Warren, how can the company be profitable?
Sorry. So we're actually we're going to monetize the payments platform. The FDIC insured accounts, the virtual accounts. That's what we're going to be pushing out towards different regions. Southeast Asia, South America, and North America are going to be the first three. We have some demand from Africa, but there's a couple of issues with the OFAC regulations and finding a reliable banking partner. It's just proven a bit more difficult. So we plan to monetize the payments platform, the remittance platform, the virtual bank accounts. The stablecoin just intends to break even or just make a little bit of profit to cover itself. Obviously we do take a cut from the interest generated, but not much that would distract from growth, essentially. You need to remember as well that the capital from USDV is being deployed only to Vamanti portfolio companies. So the valuation of those other companies that Vamanti is invested in is going to rise as well.
Yes. So the investment is the banks and whoever comes on board to support the business, right?
Sorry, what do you mean?
No,
So
I think he's saying all the money that goes into the trust is essentially supporting Vamanti businesses. Is that right?
Yeah, correct. So the Manti portfolio companies, they're going to be able to scale, they're going to be able to grow, they're going to be able to issue more loans, therefore earning more money. So Vamanti itself benefits from the whole ecosystem.
Oh, so Fundit and eLoan are essentially the yield that are being, gathered from those loans are going back into the staked USDV. Is that correct?
Yeah, that's correct. That's the reason why we want to pass on as much as we can to the stablecoin holders, is because we don't necessarily need to monetize. We could be greedy and take 50% of the interest, but then we're not going to be much different than USDT and these other kind of stable coins that are just giving you a very basic yield. We want to undercut, well, we want to overcut them essentially. If you look at USDC or BUSD and you're getting 5%, we want to offer you 10%, 15%. We want to offer you a better return to attract users to come to us. So if we take a cut from the stable coin as well, that's not going to help adoption. But monetizing the payments and remittance platform, and then obviously the previous investments in the other Vemanti companies, there's plenty of monetization there.
So there's a situation where like another banking institution, like a traditional banking institution, could drop $10 million or I don't know, way more money if they wanted to into your trust, and then basically just lean on Fundit or eLoan to figure out a way to get yield. Is that correct?
Well, the demand for the demand is, I don't really want to say thanks to COVID, but due to the pandemic, the demand is already there. The reason that we're looking at Southeast Asia and South America is because that's where the biggest demands for not only remittance, but the biggest demands for individual or commercial loans, due to poor cash flow or whatever. And this isn't because people are not spending. This isn't really a recession. This is just because there's not been fluid cash flow. So these businesses need cash flow to support new inventory, new stock, etc. So it's not a repayment issue; it's just a cash flow issue. So the demand's there from Fundit and eLoan for them to scale. But if you speak to a capital manager, they're going to be charging Fundit and eLoan 10%, which doesn't really help anyone, right? Because then those companies don't make a profit if they take liquidity. So this is a good way for, as someone mentioned before, about P2P loans. Instead of Fundit and eLoan or another Vemanti invested company going to a capital lender, getting the liquidity, deploying that, and then paying 10%, they're going to be earning 10%. And then obviously Vemanti has their dividends, etc., that come from those invested companies.
Again, Warren, who do you work for? I mean, who did Vamanti come after for you to lead this whole thing?
I was freelance. I've been freelance for quite a long time, since 2017. So I've always kind of worked for myself, or on behalf of other companies. Before this, I was working with a company called Stably, which is where I learned most of the connections and the kind of stablecoin regulations and stuff. A lot of contacts did come from working with that company. So it just kind of made sense to kind of lead this project for Vamanti.
Yeah, thanks, Warren.
So I guess one more question, not really a question, but clarification. So Fundit and eLoan really benefit from USDV since it's probably the cheapest way they themselves can get capital to disperse to those who are seeking loans in Southeast Asia. And then the people in Southeast Asia who need access to loans go through Fundit eLoan since it's the easiest way for them to get access to the loans. So it's kind of like that's the symmetry there. Like Fundit eLoan gets money from the people who own USDV, hypothetically, and that's a good way for them to do it. And then the people who get loans from Fundit eLoan, the actual businesses, go through Fundit eLoan because it's the cheapest, easiest way that they themselves can get loans.
Yeah, I wouldn't. I might not say it's the cheapest. There might be other companies out there that offer a cheaper rate. But one of the main issues with, say, Vietnam, for example, if people are taking loans out, there's normally a high interest on that. And that's just kind of the market rate. There's no way around that. So businesses in Vietnam, for example, are very conditioned to paying 10, 15, 20% on a, sub $10,000 loan, for example. And people are willing to pay it. I mean, the amount of cash flow that runs around Vietnam is phenomenal. And obviously a lot of these companies, they want to scale. A lot of manufacturing companies are looking to scale. Companies that move to Vietnam to set up manufacturing plants, they're going to need not just liquidity, but on the ground. So a lot of these companies will, getting money into Vietnam is easy, but getting money out of Vietnam is notoriously difficult. That's not just a problem with Vietnam. That's a problem pretty much in a lot of developing regions, South America and Vietnam and stuff. But you're right in the analysis that being able to draw from the liquidity of USDV is a much more efficient process from fund it and e-loan and stuff. And then moving away from that, the people on the ground that are taking these loans out, they're very familiar with fund it and e-loan and other Vamanti portfolio invested companies. So they're not adverse from paying 10 to 20% interest on the loans that these people take out.
Okay, cool. And I guess it'd be hard to replicate this process elsewhere in the world since, again, being from North America, if I try to loan out money to someone for like 15, 20%, they'd probably say, screw you, that's so expensive. That's not going to happen.
Exactly. But not just that. I mean, where else could a retail investor take advantage of the GDP growth from Southeast Asia, right? No one's going to be able to do it for $50,000, right? People are going to need several million to deploy capital around these regions. And again, Vamanti already has these portfolio investment companies. So sure, someone with $1 billion could come in and replicate the system and stuff, but no one has, right? And you could say that with any project. If you have enough money, of course, you can just replicate, another project that's already out there. But no one's copying Twitter, no one's copying Facebook. People are trying, people are failing, but it's all about the user growth adoption. So the ecosystem that Vamanti has in place is irreplaceable. It's going to take someone at least a year or two to build the connections and the partnerships and, get regulated, get regulations sorted in multiple different jurisdictions and all that. So honestly, I don't think it can be replicated, because even if someone wants to replicate the payments platform, they're also going to need the partnerships that they have, right? And even if we release the partners and these people go to them, because we already have the partners, say for example, we work with Cajero Pay in Brazil, they can work with another partner. There's nothing wrong with that. But then what's the incentive for them to essentially damage the relationship they have with us, So it's extremely difficult for the ecosystem to be replicated, because we're not just talking about a product here, right? We're talking about an ecosystem. So there's that many different working parts to all of the products and the tools and everything. If someone wanted to replicate one aspect of it, they could do. But if someone wants to replicate the ecosystem, that's going to be a lot harder to replicate.
Yeah, no, I think that most investors like me would actually see it as a pretty difficult thing to replicate, like you're saying. But at the same time, we got a lot of money invested in this. Maybe not short term, but long term mostly. Appreciate you, Warren, coming out tonight. Appreciate you talking. And I'm going to sign off. Thank you.
Thanks for joining, Adam. Really appreciate it. And again, I'm sorry for being late, guys.
Hey, one quick last question. Do you have a growth roadmap or any sort of benchmarks that you guys are aiming for?
Yeah, so we've got a couple of different KPIs, if you want to call it that. One is obviously the growth aspect in terms of users. We're trying to aim for 25,000 users before the end of 2021. That's just located in the North American region. Then we're going to be looking at different KPIs for having users in different foreign companies. So that's why we're really only targeting Southeast Asia at first. And then once we build that ecosystem out, then we're going to move on to South America. That's just mainly for the demand of remittance. We do have some partners in Ethiopia and Bangladesh and India, but with the regulation in India being pressing, we're taking a little bit of a back step and just seeing how that pans out really. We've got some predictions on the regulation, so if they're right, then we definitely know we're in the right direction. And then if something is surprising, we haven't invested in that region enough for it to be a major problem for us. So it's kind of a testing ground almost. Most of the growth roadmap is all on user base and growing the community and getting people out there. But we're very confident that once people see how we generate the yield compared to these crazy farm APYs and stuff, we're very confident that we're going to be able to steal, if you like, a lot of the market share from these other stable coins.
Well, I think we're all looking forward to the PR that VMNT has and Vamanti. I may be speaking for myself, but I think we're all excited to finally get some positive momentum on the stock itself. So thank you, Warren.
Momentum is the right word. If we released a PR announcement of a PR announcement that's coming out, a few weeks later, it doesn't really benefit anything. We're trying to snowball the PR essentially. So we're trying to group it. So you'll get announcement after partnership after announcement after yada yada yada. So we're looking to kind of snowball on this.
Yeah, thanks again, Warren. Yeah, no, we appreciate your transparency. Thank you.
No worries. I really appreciate you guys joining the call. It means a lot.
Thanks, Warren. Have a good one.
Yeah, thank you, Warren. Have a great morning, I guess.
Thank you, guys. Thank you very much. It's currently 10:11 for me.
Thank you.
If anyone has any questions, feel free to jump them out now. If not, I'll be signing off in about 5 minutes. But more than happy to answer anything or have discussion on anything you guys want.
Oh, one last question I actually had, Warren. Do you have an established timeline yet for other fiat stablecoins beyond US dollar?
We don't right now, but the beautiful thing that we're looking at, and it's quite experimental, is we're looking to wrap the USDV. We're essentially trying to get a fiat basket, and then we can wrap that into USDV. So we're not aiming for USDV to only be backed by USD. There's two options, right? We can either issue like a GBPV, RMBV, which is that's kind of gonna make sense. It's gonna happen eventually. But we're looking at wrapping different fiat assets to back USDV. So USDV won't just be USD backed. Essentially, it'll be multiple fiats backing it. The roadmap for that, I couldn't honestly tell you right now, just because we're really only focusing on the USD regulation. Because once we've got the USD regulation nailed down, all the rest is going to be a piece of cake. We have all of the evidence, all of the legal opinions from the USD side, so it's much easier for us to go to Europe or Japan and say, this is how we're operating in the United States. Here's the SEC filings, here's the reports, here's the audits. What do we need from your side to make it applicable? And most of the time, it's either going to be find a regulated partner, white label, some sort of, financial license. So it's relatively easier, but for now we just want to focus on USD, because once we have that regulation nailed down, the rest is easy.
Okay, cool, thanks. And my one final last question. I saw Tan tweet about something about creating like a dedicated protocol for Vamanti and the stablecoins you create to avoid gas fees. Is that something that you see being launched soon, or is that going to take some time, you think?
That's definitely going to take some time. We've floated this out pretty recently. We brought up the conversation a couple of months ago, but pretty recently we've had a serious discussion on it. But that's something that we have to kind of discuss more once we're already established. So for now, the way that we're avoiding gas fees is just by using an internal ledger. This keeps security high, usability quite high, because normally you have to have a balance between the two. In terms of building our own protocol, yeah, that's definitely something that's going to take a while. I'd probably expect if that is a direction that TAN decides to go, we're obviously going to be looking towards the end of the year for something like that.
Oh, got it. Thank you.
Just because that's a really big endeavor. So I don't want to give you guys any info now that's going to consistently change all the time. You know, and I don't want to make it light essentially. So it is a pretty big endeavor that we need to push out.
Yeah, it sounded like that was pretty ambitious of a thing to do. So yeah, I wouldn't really expect it to happen anytime soon. But thanks again, Warren. I'm gonna sign off now. Have a great rest of your day. Hope the team enjoys Bitcoin Miami. Probably getting pretty rowdy down there, considering it's all open. And looking forward to you know, the middle of the month and getting my hands on some USDV myself.
Awesome, fantastic. Thanks for your questions as well. Really appreciate it. If no one's got any questions, I'm just going to sign off. I've got another call in a couple of minutes. Thanks to Bitcoin Miami. But if you've got any questions, feel free to post them in the group. I apologize, I haven't paid that much attention to it. I haven't really been active on Twitter the past week or two. It's obviously, as we step into June, everything kind of ramps up a little bit. I'm working between multiple time zones. It's pretty crazy on my end. Well, okay, if no one's got questions, I'm gonna sign off. I'll see you in the Telegram group, guys, and I'll promise I'll try and be more active on Twitter as well.
Thanks, Warren.
Thanks very much, guys. See you later.